My name is Rajashekhar Kongari, Equity Research Analyst. Disclaimer for this podcast is that whatever stocks we discuss are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart to get an overview of the market, of India's market, and we'll also give an O'Neill perspective and what are the levels we are looking into, and we'll talk about market status as well. As you all know, Nifty recently scaled a new high, almost 18,900 levels recently, and there is some pullback which has happened the last couple of weeks after making a new high. This is expected because Nifty has had a very sharp up move, nearly 2,000 points from 16,700 levels. So these small pullback can be expected. It's not a major sign of cautiousness. Uh, Talking about the key moving averages, Nifty yesterday it has breached its 21 DMA, which is a green line here. This is a short-term moving average which we track. Now the next level of support is at the Nifty is at its 50 DMA, that is 18,000 level, above 18,000 level. So until then, there is no major support for the index. We would want the Nifty to reclaim this 21 DMA in the today's session or in the coming sessions. Otherwise, some more 100, another 400 points, 500 points sell-off might be expected on the index because of the no proper support for the index level. Talking about the O'Neill's perspective, we are in a confirmed uptrend, a status where our aggressive nature towards the market will be higher. The number of editions will also be higher because the probability of breakouts being successful is higher when the market is in confirmed uptrend. It is also important to track the weakness in the market because we never know when the market is going to top out. The recent top might be the top the Nifty is going to have for the next couple of months. We are not sure, but we devise a mechanism around that to identify the top. Uh, that is with the help of distribution days, we get an very approximate top which the market is making. Currently, distribution day count is at 2. Another couple of distribution days addition on the index will be back to uptrend under pressure. In such a scenario, the probability of breakouts will come down lower and number of additions will also come down. Talking about model portfolio stocks, if there are any underperforming stocks which are moving sideways or which are not performing well when compared to the market, we'll be exiting those stocks from the model portfolio as well. Some of the companies which are in the stock, which are in the news and which will be under radar during the market session. One is Reliance has launched an FMCG brand called Independence in Gujarat. So this is related to Reliance Retail. Definitely HUL, ITC, these stocks, the company is going to target these companies' market share. Again, in the FMCG space, Tata Consumer and Hindustan Unilever both are in talks to buy tea major Girnar. Again, there is a huge competition for this takeover. So we might see which company is going to take over this tea major. Hindustan HPCL, the board has approved raising up to 10,000 crores by issuing non-convertible debentures on private placement basis. And coming to interest rates, the overall starting from India, Europe, US, everywhere the interest rates have been rising because of higher inflation rates. You can see Bank of England and ECB both have increased their interest rates by 50 bps in the recent meeting that was held, and the outcome was came in yesterday. These rate hikes are also in line with the market expectations, so this is not a major surprise for the market. Talking about institutional activity, foreign institutional investors have sold nearly 710 crores of equities in the Indian market yesterday, whereas domestic investors tried to give support to the market, but they were not able to buy huge sums of equities. They bought nearly 260 crores of equities. US market closed pretty much lower yesterday. You can see Dow Jones 2.3, S&P 2.5, Nasdaq 3.2% lower. This is because the recession fears are increasing day-to-day basis. This also the retail sales in the US have come down sharply. This is the lowest retail sales they have done in the last 11 months. Labor market has also been very tight. So these factors are not helping the market to go higher. So definitely profit booking selling pressure has been very high in the US market. Talking about the Asian markets, they're not much lower when compared to US market. Shanghai is trading with a flat to positive bias, whereas Kospi 0.2% lower, Nikkei 1.5% lower. This is live prices which these indices are trading. Crude oil basket currently Brent crude is trading at $81.6 per barrel, and USD INR, that is rupee versus US dollar, is trading at 82.77 rupees per dollar. SGX Nifty is indicating a slight muted opening for the index. Yesterday Nifty closed at 18,414.15 level, and we are expecting the opening at 18,400. So there is no major cap up or cap down opening on the index. It will be a muted opening, but during the session, if there is any selling pressure, definitely 200 Nifty can test its 50 DMA, because of US market has also closed more than 2% lower. So if we are tracking global cues, definitely we might see some selling pressure. Otherwise, if there is any support for the market in India by domestic investors, definitely we might see good support at its 21 DMA as well. For the chart of the day, we have picked VIP Industries. We like the story. It's a very good growth company. I can see the numbers have been very strong. Both the EPS and sales have been growing at double digits or triple digits for the last 5 to 6 quarters, which is a phenomenal growth for a company of this scale. Also, the EPS rating is very strong, 81. Price strength is slightly lower at 65. It's not a major lower rating, but it's slightly lower. Anything above 70, 75 is very good, because the stock has been moving forming a consolidation, that is complete handle pace pattern for a long 6 to 7, 8 months period. So this might, whereas the general market was making new highs, this stock was moving sideways. So this during the due to the underperformance, the RS rating is slightly lower, but we might expect when the stock breaks out, as soon as it breaks out 10-20% up move, definitely will take the RS rating to 80-75 levels. Number of funds, which is another key parameter we look for in any stock, is very good. You can see consistently the number of funds have been increasing in the stock, which is a very positive sign. This reflects institutional activity is being very strong, and they are liking this stock company's growth and the story. So definitely these institutions will give support to the stock when there is any weakness in the market. You can see the stock has very good support at its 50 DMA. A couple of times recently it has tested its 50 DMA, but it has found very good support. Also during the handle portion, if you can see the volume is very lower. Again, a positive sign. This is because only weak hands are getting shaken out during this phase, and as soon as the stock breaks out, definitely the firm believers of this company will be staying invested, and they'll take the stock further higher when the breakout happens. So thanks for joining today's pre-bell. Have a good trading session.